We have today at 3 p.m. UK time the job openings in the States, and that's generally a red flag. So it brings volatility both sides. The initial move is the fake move, and then the second move is generally the real direction. I've seen two fake moves at FOMC times or CPI times, but most common we only have one fake move. Now, whatever happens this week, the market is gearing up for a bigger move, either to the upside or to the downside. And what's happening with the S&P is reflecting that as well. So we not only have our coins that are indicating that, the S&P is indicating that as well. And I've pointed out the levels on Thursday, and they're the same levels. But it's good to see what happened yesterday because it was a bank holiday in Europe. But so the States basically did their thing. And again, Monday is called Fake Move Monday, so it might have been the end of the correction, and then we're going to see some more volatility to the upside, and then downwards for another step. But anyways, so times to watch out today, 3 p.m. UK time. It is also the moment when London and the States join liquidity, and the 5 o'clock my time, 3 o'clock UK time, is essential to see what kind of session New York is setting up for. Because if they do a lift to the upside, and I'll show you the levels on the daily traders reality, if they do a lift to the upside, we might see some more push down. And the opposite, if they test again the support but fail to break it, then we might see a bounce up. On the daily chart, BTC is compressing. It's in the middle of a daily triangle, and it's indicating there are two more swings at least to come. One to the upside, one to the downside. And then we'll have the breakout, which again would indicate more sideways. Now that's today. So today, 3 p.m. 3 p.m. is also crucial, whatever intraday trade you might have in mind, because that's when New York is setting the start of the daily move, so to say. So if you see any double tops or any double bottoms after 3 p.m., it's worth taking a minimal risk trade to the opposite direction, because the double top or the double bottom would be a reversal. Okay, now tomorrow is the big day that we've all been waiting for, and you know how the market reacts to the FOMC. If the FOMC does what the market expects, which is an increase by 25 basis points, the market will lift. There's no point talking about, oh, well, how about if their stance is hawkish? Yes, if they do what the market expects, but they in their statement their stance is more hawkish, that might balance out the reaction in the market. So it might lift, but not necessarily to a higher high or break the resistance. That might happen. We might see a muted reaction if their stance is hawkish, but the rate is what is expected. However, if they're going to focus on the economic gains that were made by banks and other companies, like the quarterly earnings for banks have been quite impressive. So if they're going to focus on the positives that the economy is showing, and they're going to be gentle with their hawkish stance, then I think that will amplify the lift in the market. So what the market expects is a 25 basis points. If the market gets what the market expects, that's certainty for the market, and that lifts the market. That's happened throughout the board. Every time the FOMC did what the market has expected, the market lifted. Now, I am very cautious about taking a position. I have no trade open at the moment. If I had one, I would be looking to take profit before this. And the reason being is these are very volatile times. Like, you can literally see a 3-4% move to the upside, and then the gains are taken with a spike down, or the opposite. So it's generally chaotic, it's hectic, great for scalpers. I'm not a scalper. I generally wait to see how this is set. So if there's another move to the downside, I give it a couple of hours to give me a 1 hour swing, then I'll put on a fib and I'll go with the trend. The trend that will be set after the FOMC will be a longer term trade, a longer term trend as well, because we're talking about the daily levels right now that are being tested. So that's why I'm quite patient, because I know there's a big move coming and I will have time to get on board with it. So that's key for us. There are two main times in the US for Wednesday. 1:15 UK time, the non-farm employment change, which is again a red flag. Then we have the FOMC at 7 p.m. In between, we have the ISM PMIs. Again, very volatile day on Wednesday. If I do open a trade by Wednesday, I would be looking to have a take profit in place on Wednesday, if I haven't taken profit already. But at the moment, I'm 70-80% waiting and I don't intend to open a trade until Wednesday settles. Thursday is again, we have the unemployment claims. We also have the ECB. So the Central European Bank will be setting up the rates as well this week on Thursday. And of course, that's correlated to what the states are doing. And the euro trades against the dollar. So that will have an impact on the DXY, and the DXY will have an impact on the coins. So again, more volatility coming on Thursday. And then we have the Friday with, again, the non-farm employment change, the unemployment change, and the average hourly earnings. We have some FOMC reports and members speaking. So again, volatility on Friday. Now this adds up to what the and I'm gonna show you the BTC. The BTC daily formation, because I've been giving you a lot of info so far about this news that will be bringing volatility. So this is the structure that we've been building since since mid-April. So for 2 weeks, this has been gathering and contracting in this space along a trend line that has started in January. So this is the support that this was resistance, support, support, resistance, support, support. So it has been proven to hold as resistance and support of a key trend line, the midline of this top formation. Now, this is the daily chart for BTC, and I'm presenting it before I go into the DXY and the S&P, because to me it's the clearest formation of compression I see in the charts at the moment. So we would have a 24.6k descent drop, and this is quite juicy. It's 12%. If we're going to put it from here at the rejection, it's going to be about 30%. And the same for the lift. That would be the 33.6 measured move, but I think 34K, 35K is the next support and resistance. So to me, this is quite relevant to what the other coins are going to do, because BTC will initiate this, and then we'll see what the others will see the other ones following. So keep this triangle in mind. Again, I'm following the same 3 touches to the top, 3 touches to the bottom. I'm going to take this swing because it's a daily chart, and I've seen that daily charts tend to be less swingy than a 1 hour charts or 4 hour charts. So I'm going to take this touch to the top, 1, 2 touches to the top, and 1, 2 touches to the bottom. So we need 1 more touch to the top, 1 more touch to the bottom, and then we're ready for breakout. In the meantime, we might just be moving in between the support and the resistance for the rest of the week until Friday, and until the news has settled on Friday and the market has a direction. Because I believe the fundamentals are at play right now. And it's interesting to see how the fundamentals are playing out. Now, as a personal interpretation of this, I believe that we are going to see a drop. I don't think the fundamentals are going to be positive. I don't think the market is going to like what they're going to hear. However, there may be a lift to the upside to spike out any short positions, and then a drop to the downside. So that's generally how these things happen. And that would, again, if we're looking at the previous daily formation and how it moved, I did a little bit of back testing. I'm not gonna super duper focus on it. You can do your back testing on the daily charts as well if you want to see how these compression patterns work. 1, 2, 3 touches to the top, 1, 2, 3 touches to the bottom, lift off. So that was the and again, this did not fulfill its target as far as I can remember. It came a little bit short of it. 31.7, and this one was 31,600. So it came $500 less than its target. Still thereabouts. But that's the reason why I want to show you this is because I think we're going to have something along these lines, this kind of sideways into the apex formation. Okay, now, if I am to take the complexity of what I've told you from my interpretation, we are below the 50 MA on the daily. We have the daily stock turned down. We have the weekly stock turned down. So we are below daily support for BTC. And again, wherever BTC goes, the rest follow, unless we have some extra pumpish news about ETH or XRP. Now, let's have a look at the S&P. The S&P yesterday, that's why I wanted to see how the S&P finishes yesterday, to give you a little bit of information about that trend as well. So as you can see, we've been challenging the peak in February, and we didn't break it. So yesterday was literally sideways. Everything that came up was retraced to the downside, and it finished on a down candle. So this is a down candle, a lower low and a lower high, and this marks the start of a downtrend. Now, to me, this is a big 1-2 on the daily time frame for a correction to the downside. Could there be a spike up? Yes, there could. Again, I know that the S&P moves a little bit more in a more balanced way compared to our coins. So I'm not sure about the spike up with the S&P. I'm more confident about it with the coins because of the high leverage involved in that trading. The S&P has a bit more liquidity and it's harder to move than the coins. A bit more, I'm understating there. a lot more, but it's harder. It's a harder mechanism to move. So we do have a lower high on the daily. We finish with this looks like a doji, a pin to the top with a rejection, tested the Bollinger to the upside. But we have the stochastic turning up, so this is where I am a little bit confused about the direction, and that's why I'm going for sideways, because for the S&P, both the daily and the weekly are indicating more upside movement on the stochastic momentum. So again, in all honesty, I believe sideways, when I see price action not getting through levels, sideways is more probable. And sideways between the daily levels is what generally happens in these cases. Not unless we have some extraordinary good news and we break the February high and then we break the August high and we're out of the bear market. So that's, once we're past this pink line and we close above it for 2 days, to me, it's quite clear that we're out of the bear market. But until then, could this be just a little bit of a breather for a 1-2 to the downside? Yes. We would need to see it turn though. At the moment, we haven't turned that daily momentum down. Let's see the DXY. Now the DXY is at the top of the daily stochastic. It's holding support on the daily. It's got above the 20 MA on the daily. Now it has the 50 MA to get through and has the 200 EMA to get through as well. At the moment, the DXY looks like it's gained some support. It has the 5, the 20, the 5 and the 13 EMAs and the 20 MA on the daily. So the DXY is holding support. And you know, if the DXY is holding support after all this drop, chances are it might go up to the upside. Now, if the rates are pushed up a little bit higher and inflation is decreased a little bit, the DXY is likely to continue its journey upwards, which would indicate the other assets, the stocks and our coins, are going to come down, which is again where I think the daily charts indicates we're going to go. Now, what do we have? Again, just to summarize this, we have the S&P that's trying to break previous highs but hasn't managed so. The S&P momentum is still to the upside. It hasn't yet turned it down. We have the DXY that has an upwards momentum and has support. So at the moment, what's looking more likely is the DXY continues its journey upwards. If the Fed is hawkish and if inflation is brought a little bit, well, not inflation won't be reflected immediately, but if their stance is hawkish and if the rate is higher than the market expects, or even if the rate is what the market expects, but their stance compensates for what the market expects, then we might see the DXY, the dollar index, continue to go up. Now, let's have a look at our daily. What's holding back these coins from moving? I'm going to start again with BTC. You've seen this triangle. This is the main formation that I'm watching at the moment, and I'm watching the daily and the 4-hour. So at the moment, the daily and the 4-hour are below resistance, but they're holding this trend line. Now, what we have, where do I have? Yes. What we have on the daily is momentum is coming to the downside, but on the 4-hour, momentum is lifting. On the 4-hour, we also have the crossing of the EMAs. So with the crossing of the EMAs downwards and momentum lifting on the 4-hour, again, mixed bag of signals, strong signals, both of them, but they're sort of like canceling each other out. What I need to see is a lower low, because what we did yesterday was a 786. I think I posted this. I don't know where. Yes. So this was the 786 retracement of the previous swing, but it hasn't yet reached the 4-hour support and resistance. And that's why I told you we need to see the 4-hour support at 27.4 get broken in order to have a deeper correction confirmed. Once this breaks, it will be back tested, and there we are. We're going to follow it down, and it's going to be, let's say, a 10% trade if you're putting the back test as well to it. Even 9%, 8% of this target would be great. At the moment, what I saw this morning as a clear indication of more downwards action was the backtest of the 20 EMA on the 1 hour and the EMA stochastic, the stochastic on the 1 hour turned down. So this to me is a clear rejection after breaking it, and is the first backtest. You know, we need at least 3 backtests to break it. Here we've had even more, 1, 2, 3, 4, 5, 6. The seventh was the one that actually broke this one. So this is the length of sideways that we had previously. I expect something quite similar across the board for the coins for this week. I expect a lot of choppy sideways like so for the next couple of days. That's why I'm in no hurry to take any position. I'm waiting for the 1 hour stock and the 4 hour stock to be either lifting together or dropping together. If they're not, I'll hold back on my on taking a position. There is no rush because we are going into the daily apex of that Bitcoin formation. I'm watching the charts every start of the session. If I don't see that alignment between the 1 hour and the 4 hour momentum, there's no point taking a position, because I'll just be paying fees for, you know, hours or days on end until it actually decides to move. So I'll be a bit more patient now than I usually am. On the daily levels though, because we are doing, again, I know that some of you might be in trades, we are below the daily open, and I believe we are we are below the daily pivot and below the daily open. The direction is down. We break the M2, M1 at 27K, a little bit lower for the lower average daily range is likely. So this is where we could be going today. In the volatility, I would suggest take your money and wait for that beautiful confluence of direction between the 1 hour and the 4 hour. Okay, now I'm going to start with this daily, because I think it's a nice flowy transition for ETH as well. ETH is below the daily open, below the daily pivot. Again, it's looking like it's going to go to our famous 1750, 1770 level. We need to break that. We need to break that. If we're looking at the levels, 1750, 1760, 1770 is the neckline of this wonky head and shoulders. We're still in the same formation. We did a 786 yesterday. Doing a 786 generally means that we might see a swing up, we might see some back tests, because the correction is complete. When corrections are when corrections are complete, then I expect some sort of back test. Why did I change to the 15-minute? I'm not interested in that. Again, ETH this morning did a back test of the 20 EMA. The stochastic on the daily, on the 1 hour, is pushing down. To me, this is looking like it wants to push down further on the 1 hour. And again, when it gets to our support and resistance, I will evaluate to see what's happening then and there, because we might see a bottoming out of the stochastic on the 1 hour, the stochastic on the 4 hour, in which case I might be actually looking at going long for that retrace of volatility that's about to come. If it is, of course, if it is a tight stop loss trade. Now, ETH is in a higher formation from compared to BTC. It's looking like a triangle as well if we are to squeeze in these wicks. And again, we have, if I am to bring this trend line a little bit higher, we have trend line set back in same as BTC January, and it's been support, support, support. It wasn't much of a resistance here, just broke through it. It wasn't even back tested. Support, 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 support. Here was a little bit of resistance, but it's been more of a support than a resistance trend line. Once we break out of here, of course, the 200 MA on the daily at 15.20, 15.30 is the target, and we have a trend line there as well for confluence.